On to your market news now. In Asian markets advanced on Tuesday with Beijing's planned stimulus measures pushing up Chinese shares as investors turned their attention to this week's release of corporate earnings reports. Tensions persist over a potential global trade war, however, with European Commission President Jean-Claude Juncker heading to Washington on Wednesday in order to meet President Donald Trump of the United States and try to avert an escalation of tit-for-tat tariffs. Tokyo's Nikkei gained 0.5% to close at 22,510 points. Hong Kong's Hang Seng also ticked up 1.4%, rising to 28,662, while the Shanghai Composite Index moved up 1.6% to 2,905 points. It was the calm before the earnings storm in the US as the stocks finished mixed on Monday, with rising bond yields lifting banks and investors' earnings anticipation boosting the tech sector. Investors were still assessing the current state of America's trade wars and awaiting major earnings announcements. The benchmark Dow Jones Industrials finished in negative territory by just a nose, falling less than 0.1%, pointing to 25,044 points. The broader S&P 500 gaining 0.2% to close at 2,806 points, while the tech-heavy Nasdaq up 0.3%, finishing at 7,841 points. It's back to green for the JSE thus far, and it seems 0.5% to the good after a recent fall. So perhaps a lot of people getting back into the market. At the same time, taking a look at how Europe's faring, also sitting mostly in the green. But in-depth analysis coming up of that in just a moment. But let's unpack just how the markets are looking for now. Perhaps a little lonely this afternoon, but Travis Robson from IG Markets joins us now from the JSE. Travis, thank you so much for the time. Of course, it's an interesting market movement, around 0.5% or so. What are you seeing shaping markets? A lot of earnings as well coming through.
Yeah, we're getting a lot of local earnings coming through. We had Vodacom and Kumba releasing trading updates. We also had educating group Curo late afternoon coming out with trading updates. So that's definitely hitting the local front. And then in the United States, we've had quite a big set of earnings still coming through. We've got the FANGs that are coming through with earnings. We had Alphabet come out with a trading statement. So that's been key for the markets. But possibly locally, we've also been watching the BRICS announcements and to see what injection of foreign flow comes into South Africa, which will also have an effect on the markets.
Yeah, we'll get into that BRICS discussion in just a moment or two. But if we unpack that equity news, of course, you still have Vodacom's trading update as well. Do you see some positivity sort of filtering through into the market from their point of view as well?
I don't, unfortunately. Numbers were soft. The share price is off today. Highlighted that a lot of impact on SA's numbers were linked to voice, and as we know, voice is very much a race to the bottom. We expected double-digit growth numbers coming from the data. Unfortunately, the group released subdued numbers coming in about 9.6 to 9.9% increase in data, and that is where a lot of the revenue is going to be driven from in the future. So good numbers from voice. However, voice is something that not a lot of investors are looking at closely. I do like the fact that the group happened to increase users by 2.5 million, which is always good. However, a lot of investors are a bit cautious over the results at the moment because it's heavily swung towards voice as opposed to data numbers.
Does the BE deal they signed a little bit earlier on this year, does that help them in any way?
Yeah, of course. Any mergers or acquisitions or any deals that the groups can restructure. You know, they had the data deal with Neotel that helped the group. We saw MTN also have certain deals as well with AfriHost. And we've seen a big group like Cell C having a big buyout with the likes of Blue Label Telecoms. So all these deals are good for the telecom sector. However, investors are watching very closely for growth and opportunities within the telco sectors. A lot of these companies are looking for growth in Africa and emerging markets where they can still continue to drive revenue from voice. However, where they're going to need to drive revenue is from data. We are seeing smaller outfits like Rain come in that are going to offer subscribers data packages, and what you will see is subscribers having dual relationships. You have dual phones coming out with dual SIM cards, so you can have a relationship with the likes of Vodacom for your contract, and then you're going to be topping up or buying additional data from another subscriber. So therefore, a company like Vodacom will be losing that subscriber to another company from a from a data point of view, which is going to be a concern for the future.
I certainly want to look out for. At the same time, you're speaking as well. We chatted about Kumba off air as well. We, seeing that trading update as well come through. Not good with regards to earnings as well for that interim portion, but they seem to be very buoyant in offering a dividend of around 14 Rand and 50 odd cents.
Kumba's always been known for paying a really good dividend. Obviously, it's a subsidiary company from Anglo American who hasn't paid a dividend, so a lot of people who had Anglo American shares would have got Kumba shares, and that's where they would have seen the dividend yield coming from. In terms of their results, 3 billion in revenue in their headline earnings, which is not too bad. I find the results actually quite pleasing in a resilient, challenging market. There was a little impact from the logistics side as well as from the foreign exchange side. We saw big fluctuations in the foreign exchange in December with Cyril Ramaphosa coming in, and so that did affect a lot of the mining companies. But however, the group has come out with some decent set of numbers within resilient or challenging times, and the fact that they are looking at repaying a good healthy dividend to shareholders will make investors happy.
Thembeka Mkhwanazi, the CEO, looking really buoyant as well this morning with regards to those results. But let's chat about BRICS very quickly. Your expected outcomes, what would please you? What would make BRICS a successful summit in your point of view?
Well, as you know, South Africa has a very low GDP. And this has been a problem. We've had a lot of domestic shortfall due to political uncertainty, due to a weakening economic growth. And what I would like to see come from it is stronger relationship with our BRIC partners. Earlier on the news, you saw alliance or allegiance with China and possible many different deals being struck, which is really good. Cyril Ramaphosa has spoken about finding influx of foreign investment. We've seen the National Development Bank plans to lend as much as $600 million to South Africa this year. So where we are falling short on this domestic front, hopefully we can find an influx of foreign equity or foreign capital coming into the markets. This can also come through with the likes of the JSE listed stocks. You see foreign influx buying into South African listed companies. However, we also want to see better management of SEOs, the likes of Eskom, which has been in the news quite recently, and that will also stem for better relationships or partnerships that come from the BRIC nations. So better management of SEOs, better relationships with private sector companies, and just better foreign investments coming into South Africa. That's what I would like to see.
Travis Robson, IG Markets, thank you so much for your time. A quick look at the markets there, of course, and just how everything has been trading. That is a look at your market. 13.32 for a US dollar for now is certainly how the market's trading. 0.5% to the good as well for the JSE All Share. We'll unpack the rest of your news and markets just after this. Do stay with us.